Okay, let's get right into it. What are we at here? So, 10:15 on the Wednesday morning. So, just that little lull of volume sort of before it sort of comes in for the Asia session and that. But got to start off with gold because this was such a great trade through yesterday and particularly overnight. We saw it sort of come up and take out that price target. So, took profit just above 2,000. So really such a great trade. And look, this is what we chart out as it happens. If we get down onto the lower time frame, this is what we were trading through the other day. We caught the short trade up the top here, sort of drifted down to the bottom side here, and we can see how many times that the market respected this channel. And this is the thing that sort of like when you see it like sort of so strongly, I mean, this is, dribble down here, but you can see that this is a very structured move down. And then once it broke out of this here, that needs to be respected. Now, so from these sort of points in that, you could have expected possibly a little bit of a pullback here and then a sort of a shoot off. But the fact that it just took off through Asia session, as I said a couple of times, I really only give it about a $5 range through Asia. This move here went 77 through till 93, so that got a $15 move. Obviously, a little bit of a pullback through that sort of like period into the sort of European session, but US session again just bang kicked right up. So it's quite a move, and you got to sort of look at this now because from this pullback here to the bottom of the channel, just over a day, it's a $20 odd move. Sorry, $40 move to the top side. And that's just such a solid trade. So as we can see, we got the measured move here, and that's sort of been taken out overnight. Markets seem to agree with this. And if we zoom back out here, we can start to see sort of why, other reasons, apart from mine, because not everybody's just trading this one measured move. Why else did the market sort of decide to sort of sell it down from here? And this is because if we sort of drag it back and we look left, we can see that the market has sold it here time and time again. So we seem to have got up above this wick high here, but there's other ones here. So really coming up to sort of test previous month's wick highs. But if you look at these things, and if you put it onto a monthly, which I think monthly might look a bit better if I put it on this chart here, and this is what I've been saying. So this is the chart that we were trading off yesterday, and we were saying, look, this little sort of 3 drive down, sweep out some stops, take in some shorts, and then use that liquidity to just drive it up to the top side. But if we get onto the monthly here, these you can see why it stopped at these sort of key points, because the key points sort of particularly when you've got these sort of large move up and then sort of drifting back down. I'll grab all this stuff off. So you've got your big month up last month. This was the Middle East driven move. That's fine. Easy pull down in the new month, creates this bottom wick. Now, while it was around this zone here, this sort of 1950, you isolate and you sort of pick out, okay, where are the key points? So the key points are sort of body fills of the previous month. So it was 82, which we saw came back down on 82. At the time, the wick high, wick high was 2004. So this is a reason why it sort of pushed up into this area here. Hit that wick high, people are going to go, okay, yep, that's enough. Let's get off on that. And it's pushed back down. And then you've got previous wick high. So we've still got this alert set here from, a week or so ago, whenever we sort of put it in there. I can't remember exactly. But as that sort of gets taken out, you can see where the body is at the moment. None of these bodies have managed to close up here. So we're on the 22nd. So we've still got, what have we got? In terms of trading days left, we've got 7 trading days left. Yeah. So yeah, seven trading days left, including today. This has to sort of close. Well, it doesn't have to, but it'll be a very bullish sign if it closes above 1991. But realistically, above 2000, I think is better because it's just a nice round number. But it would be managing to do something that the candles have never done previously. The market's never managed to close up here. It's got up very close a couple of times, but you can see the reaction when it failed to do so, and it, boom, came all the way back down. So I think certainly if this can take out the top wick here. I think it's worth at least a push up to this sort of 2009 to test that level there. I imagine, we got to sell back from 2006, but I imagine we probably get another little sort of push up to sort of test this. If we can take out 2010, then your next targets that you're looking for are really, these previous levels where we've seen that market has kind of sort of let it go to before smacking it down. So obviously the more recent ones are the more relevant ones. This is on a monthly candle as well, so obviously you can drill down into daily forms and sort of go, okay, they haven't sort of carried across. But the point is, you can sort of get down onto these sort of lower charts here, and you can sort of say, okay, well, in terms of this is on the daily. This is going to be a crucial zone. This will be a bit of a crucial zone. These are going to be the sort of levels that you'll be looking at if we do break these wick highs. So, I mean, just roughly here, well, if we got sort of like, that 2020 level, 2035, 2052, this will be a very strong one because it's like the high body fills, the high body closes. And if you notice sort of where I'm putting these, I'm not putting them at the tips of the wicks. I'm generally putting them where you can sort of carry enough, like it's hit multiple spots and sort of it's been significant for multiple days. This is on a daily chart. The top one's the wick because that's the all-time high. But these top wicks here have become very close to what would be that kind of range there. But I don't really take it from the wick so much just in this instance because, for example, this wick here, this could have just been a bunch of stops just going shooting up kind of thing. There was no buying pressure to hold it up here. So it's not really super as relevant. But these daily ones are very much sort of the ones that we're sort of looking at. So this gives us a couple of nice levels if we do break that 2010, last month's wick, where we're going to sort of find a little bit more resistance as well. Now, just because I've marked these out doesn't mean it's going to stop at these points. You could either sort of see a little sort of pushback, a little pause, or it could just sort of cut straight through. It's not a guarantee, but these are just the areas that I've sort of isolated and said, look, these are points that if I'm sort of in long positions at the time, I'd probably be looking to sort of chill out. Again, I've been saying I'm not looking for any shorts here. We are looking like a very large, sort of almost bullish flag breakout above these highs as well, which again, people that are trading that sort of particular setup are going to be taking notice of as well. So I think the first key thing is to get above 2010 and then sort of see what sort of happens with the price action after that. Generally, as we keep saying, you got your resistance, you look for your breakout, find the next point of resistance, come for a back test, then the real test is on because you want to break that breakout candle to sort of continue on pushing up further. So 2010 is the first key. Wait till it finds that resistance. Look for some nice sort of pullback entries in that if you're not already in positions or if you want to sort of like add to your positions. And then once that sort of breaks that breakout candle, that's going to be confirmation of this move to sort of push up higher. And then we're looking at these 2035s, we're looking at these 2050s. And, if US dollar keeps selling off, that is what seems to be the ultimate sort of driver for gold at the moment. The RSI on the daily is looking like it's pretty healthy. It's just sitting around that 50 zone. It's definitely got room to run to move up a little bit higher. We just want to see, obviously, continued pushing, sort of taking out the wicks to sort of see that, just to justify the sort of the next leg to be sort of pushing up. If we jump down onto the lower time frame here, as we can see, it's sort of it's come back, it's made itself a nice little base. So we know that the buyers at the current are just sitting in this zone here, just under 2,000. If we get a break under here, be looking at the back test of that resistance that we never really got, and we can see that this comes through here. So that was your major breakout of this particular move. And then again, if we look down underneath that, we're looking back down at sort of 85. And this is what I say with gold, like, it always likes to do a little shakeout before it does its move. Not to sort of say this, I mean, we saw yesterday, it took off. but I think that's because this move here was the shakeout. You know, here's the support. Here we go. We've dragged in shorts. Bang. That was the shakeout before it made its move. But yeah, at the moment, if you can hold above this sort of 97 zone and between sort of 2007, so $10 range here, I think that's the area to play in for the intraday. If it does drop down under here, I'll be waiting for it to base a little bit. So let it come down, base, and then I'll be sort of looking to add more to the longs for the top side. Aussie came through, took out our sort of major price target, so that's certainly been quite a run. Might be able to see better on this chart here. Both of these, as you can see, I trade them quite frequently. No, we go back on to this other one. So chopping and changing. But as we can see, this price target here that we achieved overnight, or yesterday, I should say, was sort of obviously sort of, we knew, like, we've got this marked out with this red zone here. We know buyers are going to be here. We know this is going to be an issue. And basically sort of, obviously it's paused it at the moment. It doesn't mean that it's broken down, doesn't mean it's going back to flat. But it just sort of means that, you know, we know that sellers and people are going to either be taking profit here, or we know that sellers are going to try and step in and sort of push it back down from here. So, you know, this is a reasonable area and reasonable a lot of price action to be happening around this zone. Obviously, sort of we want to sort of continue this sort of upward momentum here in this little short term, but, you know, we're going to have to sort of see how this, clean these up a little bit. We have to sort of see how this goes. Obviously, sort of we had a bit of a push with US Fed's, what was it, FOMC minutes overnight. So slightly hawkish. I had a quick sort of browse through them, nothing sort of too in depth in that. I was asleep at the time, to be honest. But from what I saw, so general sort of like, you know, inflation's still too high. We still have to push a thing. Like, I mean, the target is 2%. So, you know, till it's at the target, it's always going to be considered too high, and they can't be sort of sitting back and going, oh, yep, look, job is done. Well, job's not done until you're at your target, is it? So, you know, it's kind of expected talk from them, and yeah, nothing really too much to sort of worry about. If we link these ones up here, I mean, this is a little bit of a sort of thought for Aussie as well, if this were to be a bit of a channel. Certainly, honestly, personally, I wouldn't want to see Aussie back down. He's done so much effort to get up to this zone here. If this were to be a channel that it's trading through, coming back down here could sort of result in sort of like, you know, back into the 64s. But again, look, if US dollar decides to run, that's what will happen with it. But certainly sort of I would like to sort of see this momentum sort of continue and sort of push a little bit higher. If we sort of clean up a few of these just for now, just so we can see a bit better. Where are we at? Link a couple of these highs together. This is not particularly something. Look, I'm not completely sold on this at the moment, but it could be pushing into some sort of little wedge here, which of course, you know, leads to downside moves. If this does sort of happen, I'll sort of be waiting for the sort of break and retest, and then the second break to be looking for any sort of short positions. As I said, the momentum is very much to the top side. You know, RBA is finally doing something with their rates. Fed's more in the camp of pausing. So on a fundamental sort of basis, you'd think, you know, there's the divergence between the two central banks. So there could be sort of like, you know, on a fundamental level, there's a reason to stay long on the Aussie. But of course, you know, this is a very strong sell area. We've isolated it and sort of picked it out from, you know, a couple of 100 points back. So, you know, obviously sort of like if the market gets a hold of this and we lose this little momentum here, then, you know, this could be something to sort of think about, sort of some shorts. If we get down underneath 65, I think would probably be the time when we sort of say, hey, you know what, maybe this is going to have a little bit more of a deeper sort of pullback to sort of see if we can sort of find some lower levels to potentially sort of get long again on. But in the short here and now, it's certainly, you know, it had this little range that we sort of picked out yesterday. We got the breakout, got the back test, had a second effort. This one, as you can see, in this, if I sort of get rid of these for 2 seconds, it shows this a little bit clearer. So you've got your breakout candle, you've got your back test, and then you've gone to sort of pass that breakout candle, And as you can see, it was unable to sort of get the close above here, and as a result, rejects back down. So it doesn't mean that, okay, it's failed completely, but just in this attempt here, while the market's saying, look, we've done our back test, we're going for a second effort, it's still unable to get that close above that zone. So, that's just a quick idea of sort of how this sort of breakout. There's your tip of your candle, back test, next run. You want to see this charge through. If it doesn't, then you've got this sort of double top sort of thing happening. And obviously you can see the result here from 86 back down to 44, 45. So a 40-point drop off to the downside. And yeah, so it's still sort of respecting, as you can see here, that little lower support zone that we marked out yesterday. So we know that the buyers are still keen around here. We saw them move up. We can see this is a nice little test to sort of, and that's all it is. It's the buyers coming down. Let's just test, see, and bang, it got pushed back up. Buyers are still here. Again, this is coming in line with a bit of a confluence if we do break the 65.40, because you've got this short / medium term rising support coming up through here. You've got the horizontal support here. A break of this zone, as I said, if it fully commits to the downside, should cause something like this. If it breaks these lows, i.e. coming down here, and this is what I was saying, underneath 65, I was called that confirmation of a deeper sort of pullback. And I think once that happens, we could be looking, back down around the sort of, 64.70 zones before we find a little bit more support. But we'll deal with that when we get to that. The here and now is it's basically back in this little range. If we're looking above sort of say 65.70, I think that's good for another test on the top side up here. And as I said, between below 65.40, I think we could be looking for a deeper sort of pullback. All right, flip across onto DXY. So it certainly is still dribbling. So I'll clear up a little bit of the stuff here. So we haven't completed the full measured move as of yet from this bear flag. We completed the bear flag, the larger one, this big bear flag from NFP. This came down, and that's sort of exactly where it closed on Friday evening, Saturday morning local time, and it's obviously just melted down ever since. It has started to get its little rally here, and this is why we sort of picked this out. Like, this was the pattern that we sort of picked over the weekend. We said, look, it's going to come down. It's hit this zone. It's gone obviously a little bit deeper, and we've seen this little rally up. So this is pretty much as expected sort of price action. This isn't anything like, okay, are we necessarily seeing something massive turnaround? It's just really sort of this kind of thing happening. A little bit of a push up here. Again, these pushes, this could come all the way back up here. This is more just where I believe the price action will flow through. So we said it would come down, find a little bit of support along this area here. If we drag it again, you got to keep looking back and looking left and saying, well, okay, why would it bounce from around this zone? Well, we can see previously that this was, resistance here, resistance here, resistance here, became a support zone through here. And obviously lower ones just down here. So there's a good chance that we know that there's a big exchange of, whether people be long or short through this area. Like these sort of bits where it's cut through here, it also cut through here. So, we can expect that there's going to be a little bit of support, as there was previously, to come down here. Test how those buyers are, see how strong they are, see how committed they are on these sort of lower levels. And as you can see here, given the news as well, a little bit of a backing there. We've got a little bit of a sort of divergence, very small one, sort of coming through this zone here. Too many little lines on this. But realistically, if we take this low here and drag across to this low, matches with this low matches with this low, comes in a little bit higher. There's your negative divergence. It's a negative divergence. It's in an area that we've already sort of isolated and said, look, we expect a little bit of a push up here. Plus, then you had sort of slightly hawkish sort of Fed talk. Bang, 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 three things, and there's the result. It's pushed up. As I said, look, I'm not sort of shocked by this. I was expecting, and I've been saying that the sort of push would come. It's the turnaround Tuesday kind of thing for the US. They've had a bit of a push up here. What you do is you wait for it to come up here. whether it's sort of, look, as I said, it could come up and retest these bottom wicks here. It could even sort of rally all the way up here. Depends how hardly they want to squeeze it. But the idea is still that here's your push down, you push back up, you look for the resistance, and then the second effort. This is the one that we say it's always the second effort to determine how strong the next move is. Because as it comes back up, this move can either come back down here, find support again at this horizontal where we have seen it is, and then you've got a bit of a double bottom situation, and then you sort of play with that how you do, which is basically come back up and you look for the break of this high. You can sort of see it drive back down, go through these lows, which would bring us down to that measured move price target, which we've sort of already picked out and put down here around that sub 103. Or it could come down and it could find that instead of the buyers being at this zone down here, we could see that the buyers go, you know what, I want to give it another go here. And that could give us a higher low, which is then obviously the buyers have sort of thought, look, I'll buy from here, or maybe the selling is exhausted. And now, you know, people are happy to sort of sell it and look, you know, I could have got this the other day. I'm happy to just take this today. These guys said, look, I paid down here. I'm happy to pay up here. And this is what would give you a bit of a sort of a deeper sort of pullback. And this is the kind of thing that then we could sort of, if this scenario were to play out, you'd be dragging up some little channels, however it works like this, to come back up over to this main sort of falling resistance, which gives us really an overall of this channel. So these are the sort of outcomes that we're looking for, that sort of like, certainly it's going to come up, it's going to find resistance. Now, as to where that happens, as I said, it can go up, down, you know, you just have to wait to sort of watch the price action, watch the charts to see where it levels out and sort of see where they try to sort of hold it at. But this drive down here will most likely come. You know, nothing's ever for sure. You can get full V-shaped recoveries and it could go like that. I don't think the news last night was enough to change sentiment enough. But you're certainly getting right down to these lower levels. This is around the 50% retracement of that 3-month move. So, yeah, people are bound to have a bit of a shot again with US dollar. They're still getting good data out. So, yeah, it's interesting to sort of see how this one will sort of play out moving forward. But it's nothing to be sort of like, oh my God, you know, here we go, we found a bottom and it's going back up to the top. There's a lot of levels for this to sort of get through on a technical basis. And there's a lot of levels, or a lot of sort of areas really on a fundamental basis for them to get through to sort of see if they're going to see any sort of future growth with it all. So it's not, I don't think we've seen a bottom here and we're shooting back up. I think this is just a little bit of a profit taking from from people shorting it. I think it's a little bit of a sort of fundamental thing from the sort of the minutes, changing the landscape a little bit somewhat. But again, these sort of things with the minutes and all these sort of things, these aren't the big ones. Like the minutes are kind of higher up because it gives a bit of insight, yes, but it's not like hard evidence. Sorry, sort of concrete data evidence. It's more just talk. And generally talk, commentary, all these kind of bits and that, the moves don't tend to last. You know, when people sort of actually sort of come out with solid data, then people can, you know, the people that are moving these markets, they can readjust their books in accordance with, okay, well, the landscape's changed and now it's this, and change our positions accordingly. But, you know, when it's talk, it's really just very high level sort of speculation. So I'll wait for this to sort of come up, find a bit of resistance, see how deep this pullback comes, whether it comes here. As I said, I still think this price target is due to get hit because it's such a nice sort of bear flag. So I think one little push up here, one more drive down, and then around this zone, I'd expect a little bit more of a sort of maybe a bit more of an effort of a pull up. So let's get these ones out of the way for now. Cool. And then we sort of flip across. Let's have a look at China. So China's come down, second price target hit, bang. I honestly didn't think it would come this quick. But you can see this is the importance of these confluences, because we can see, and we've sort of marked it out and we've gone through it every single day, like literally, that, you know, buys here, buys here, buys here, buys here. We were looking for this big rising support. You know, if you drag this out, this is coming back. This is what set it up from the start of the year. High expectation that we were going to get further sort of a further drive off this area here. But it was basically, and this is why we sort of mark these things out, because this played out exactly as we put it down. That came down here, had the confluence of the two, pushed back up. This is where it sort of pushed back up, finds resistance, comes down, tests these lows. This is also at this point, not only is it testing the lows, it's gone through the rising support, and then bang, it's just cut through. And so you've got the confluence there. Neither of them sort of worked out, and you can see the meltdown. And this is just a big meltdown. As I said, 3 months it took in this range along here, and that's 1%. And then sort of in the space of 1 month, or not even 20 days, it's dropped 3%. So that shows the sort of just the significance of this actual drop down compared to the sort of what I dubbed the Great China Grind. But this is an area, as I said, this is the second main sort of price target. I thought we would have got a bit of a push up here to sort of come down here, but obviously market saying, yeah, let's hammer this down. If we put onto the daily, clear up a little bit of this stuff here. As you can see, my idea was that we come up, the price target, rally up a bit, and then come down to this level. But no, markets just said, look, we went quite quickly from here up, and probably about the same actually, because we had this little push up around this area here. So this amount of time from 712 to 734, you got 734 back down to 712, probably fairly similar amount of time with the two. But certainly, again, this is another reason why I think you might start to see a little bit of US dollar sort of firming up, is because we're coming into these support zones, and it's not that China's obviously part of the DXY, but if they're buying US dollar on one market, generally these things do happen, and this is why I like using that sort of what I sort of call the cross chart confluence, is because these things tend to move in such a way that they'll be hitting supports or supports, major resistances, generally on multiple charts. Of course, you can get bits of news that will be sort of isolated to one pair over another pair, and you've got to be able to pick those things out. But when you see a broad sense of, market coming into support areas, known support areas on, 3 or 4 crosses, all with one sort of common denominator being the US dollar in this instance, that's when you sort of start to go, okay, well, I think the market as a whole, they're going to start be buying it, whether it be the pound, the euro, the sort of buy back against the yuan or whatever. So yeah, I wouldn't be surprised if we get a little bit of a sort of push up and a little bit of a hold around here. We're quite heavily oversold as well. Again, this is on the daily. But who knows? They may be absolutely heading for the door and drive it down through here. So you got to be prepared for anything. But I would say certainly you'd want to be getting below any of these sort of previous wicks down here. So this is still only, I think, the 38. So this is on the 38 fib. So you could see another drive down just a little bit lower. We've got this previous wick here. You can see over here as well. It was supported. It was supported. So there's a high chance that you're going to get the buyers stepping in. And this was the thing is as well. This is a double bottom support area. So they tested it and tested to try and break it down here. So we know it's going to be quite strong. It's not just a one-off touch. So yeah, we'll have to sort of wait and see how we go here. But I would imagine a little bit of chilling out around this zone. Finally end up with copper. Copper just has been such a great trade. Look, it's sort of come right back up. I'll clear this up. So this is what we were saying yesterday, that you've got this sort of top end of the channel here. We've seen the wicks come out the top here, being smacked back down. Wicks come out the top here, it's been smacked back down, but still managed to close somewhat sort of bullish on the daily. Albeit a very small candle. I wouldn't be surprised if we see some pushback around here, but it really sort of tested the two levels that are sort of isolated to sort of say, it was 380. 380 is one that I've been talking about for weeks, saying that this is a line that I want to get above to sort of say, hey, look, this is a confirmed kind of move. And it's pushed right through here, and it's come up and it's taken out the daily. Well, it's not taken out the daily, but it's come back into these daily wicks here. So we can see previously, sellers were here, sellers were here, sellers were here. So these are the factors that we look at and we go, okay, well, there's a high chance that they're here again. and as you can see, came into the zone, sold back down. This again, it doesn't mean that this is going to be the trend reversal, but it just sort of means there's a high chance, or higher chance, that we're going to see a little bit of a pushback here, because we've seen people do it before. We've seen people, well, we've seen people do it before, but there's going to be people that are trying to short it from here. There's going to be people that are taking profit from here. So again, it's nothing too much to be sort of surprised about. If we can get above the zone, then we're really sort of cooking. We're moving up towards sort of 3,900, 30, what was that, 396, around that 4,000 zone. This is going to be big time kind of thing if you can take out these highs here. But certainly, as we sort of picked this one, we had higher highs, higher lows, and once it got through this falling resistance, it just really sort of took off. So, again, with these sort of things, you look at it sort of, okay, it's sort of going to be chilling out here a little bit, most likely. You got Aussie being knocked back from its price target. China's hit its price target. Gold hit its price target. These kind of things, everything's been hitting its price target at the same time. Well, there's a higher chance that maybe we see a little bit of a further cooling on these kind of things before we find new bases to have another run up higher. All right, cool. That's it from me.